All right, so it's an overcast day. I decided I'd walk to work today, and going to talk about the S&P. So, you know, the weather's not the only thing that's cooling off right now. The S&P looks like it's starting to roll over, and so what I'm looking at here is this rollover just a day or two, or is this something that could happen that could start something like a new rollover to a potential a big correction? Well, we're going to find that out. I also want to go through the money calendar. I'll show you what it's looking at for the next couple of weeks. And of course, I don't want to stop there. I want to look and see what's possibly on the radar going forward in the next couple of weeks. So hang it with me here, guys. I am now at the office, and let's go inside. Okay, so before I begin, real quick, the disclaimer on the screen, you can read this in its entirety. All you have to do is just hit pause right here on this video. Two quick things I'm going to mention. Number one, stock and options trading has large potential rewards, but also large potential risk. And number two, I am not an investment advisor. I'm simply here to educate you on how it is that I spot opportunity and create alternative risk trading other than simply buying and holding stocks. All right, that being said, I told you at the beginning I wanted to talk a little bit about the money calendar and what I'm seeing happening, what's transpired so far for the month of February, but more importantly, what is going on for the next couple weeks. So let's push forward. You know, the money calendar, for those of you that are seeing this for the very first time, so this is a patent pending piece of software that my programmers and I developed where we're looking at 10 years worth of data. And we're looking for short-term patterns each and every day. So what my software does is it looks 10 years back in time, and it's looking to see, are there any stocks that have particular buys and sells that happen around the same time frame, or seasonally bullish and that are seasonally bearish. And it has to have happened at least 90% of the time in the last 10 years for me to spot it. From there, I'll go and I'll look for those option trades. I'm going to look for a couple of today on an example. And like I said before, this is a very valuable piece of software to me that I'm in the process of getting a utility patent for this. So it looks like this when you first open it. It looks like a calendar. This is the month of February. Now, this was the last 3 weeks, and you can see here that the market had been up. And if you take a look and see what's going on with the S&P 500, it has pretty much ran this exact course where literally every day for the first 3 weeks of February, we've seen up days. Bullishness that is as high as 100%. If you look at February 11th, it shows 206 stocks, 205 and 1. Okay, not quite 100%, but better than 99.5% of the stocks there. And then the lowest that we saw, you have to go over here to the 19th last week, where we saw only 51 trades had patterns that were 90% or better in our favor in terms of the last 10 years. Well, 59% of those patterns were bullish. 41% of those patterns were bearish. So yes, it does spot bearish opportunities as well. All right. So if we move along, what I do is I'll take a look at these and I'll click on a specific day. And then that brings me to the daily. And I'll look across the daily and it'll show me stock symbols that have been at the 90% or better accuracy on the patterns. Green means that it's bullish. If I get a red bar, that means it's a bearish opportunity. And then I'm looking at things like net profit, of course, accuracy, average profit per trade, and even things like the last time it had a losing year and how strong is the actual pattern. We're going to go into that with a real example in just a moment. From here, what I'll do is I'll click on an actual stock. When I click on the actual stock, there are two questions I'm asking myself as an option trader. Where's it going, and how long is it going to take? Where is it going? Well, that gives me the average move. So if I'm looking at an average trade and it shows $1.36, then I know that over the last 10 years, this pattern has produced an average, including the loser, of $1.36 during that time frame. And this time frame was October 14th to November 20th. Now, I also noticed the last 3 years, it's actually done much, much better, and we're seeing an average move that's about close to $3 on this trade. So from here, I've got my average of what it has done in the past. That gives me an idea of where I like to call where's the pattern going. And How long? Well, the time frame that this best worked out in this case, was about a 3-week, 4-week, about a 30-day time pattern. From there, I simply go in and I start looking at options. And I say, all right, where's it going? Well, then I'll take that $1.36 to $3 that we were looking at. And then how long is it going to take to get there? Remember, the end date was November 20th. So it just so happens there were options that expired on November 20th. So it made it very easy for me as an option trader to determine what I wanted to do. So I'm looking at, in this case, it was Hormel, seasonally up, volatility was low, price target was 53. And so what's the best trade? And we were looking at, for instance, maybe it's a 50 call. Maybe it's a call spread. That's how I set it up. And then after that, I finally go in and I look to place that trade. All right, so let's talk about what's happening right now with today's money calendar. So let's scoot on over. And here's the February calendar. And if you notice here, now we're heading into a bearish week. So you want to know what I think is happening over the next 2 weeks? Looks like a lot of bearishness. If you take a look this week, we have the 22nd, 23rd, 25th, and 26th. 4 of the next 5 days, of the 5 days for this trading week, are bearish. Next week, Monday the 1st is bearish. Tuesday the 2nd is bearish. We flip the bullish on Wednesday. We stay bullish on Thursday. Friday we go back to bearish. So if you can see, between the 4 days this week and the 3 days next week, we have 8 trading days where we're seeing that that potential bearishness creeping into the market. Is this the beginning of a pullback, or is this looking to be more of a short-term pullback? Well, this, obviously, time will tell. And, of course, we'll look at the calendar again sometime in the month of March and see where things look to go. But I'm really interested in these 2 weeks. And I'm interested in looking for something that may go up if the market goes down, or goes down and we could profit on it to the bearish side. So let's take a look at what looks like the worst bearish day today, the 23rd. Take a look at 23rd, and you can see a lot of red on the screen. There's some green on the screen too. And lo and behold, look what's at the top, TLT. Now, TLT is the bond market. Now, if memory serves me correctly, the bond market goes up typically when the stock market goes down. So this might be a great place to start. But as you can see here, I see my net profit, the fact that this has worked 9 in the last 10 years. Also, it's averaged $3.62 during this time frame. The end date shows as April the 2nd on this particular time frame. And our power meter is a nice big 120. So that's something that we can look at as we move forward, a 29 trading day strategy. All right, so again, I'm going to look at that pattern here, and I'm going to move over to now looking at TLT. So let's look at TLT, and we can see here February 23rd to April 2nd, and we see that there's our pattern. Here's our start day, February 23rd, and here's the end day for the pattern, April 2nd. So 9 of the last 10 years, this pattern has worked. In fact, the last 8 years have been profitable, as you can see by that tune. Wow, almost 20 points profitable last year. You know why? Because last year we were in the middle of a pandemic, and the only thing that was going up when the market was going down was the bond market. But if we take that out of the equation, we still see something in the last couple of years that's sitting up here in the 3s. So this looks good. The only year it didn't work, well, that was 2012. So I can move and I can see more of this by just clicking on the data. You can see what happened to the bond market, how it rocketed up, came back down, rocketed up once again. But take a look at 2019, all right? That's more of the pattern we're used to seeing, where we move from, in this case, the teens into the low 20s, the low 120s. So for me, again, where is it going? About 3.5, 4 points. And how long is it going to get there? April 2nd is what I see. So now I want to move to my stock and option table. And what I want to do is I want to look at something that expires around April 2nd. Well, there's an April 1st option that's a Thursday. Guess what? Friday, the markets are closed. So we're going to go with April 1st. So I'm going to look at TLT, April 1st. I've got a 10% strike price target limit on this. Let's update the graph. And let's look and see what April is giving us. With the symbol, TLT, trading at 142.44, all I've got to do is add 4 points onto that. So that puts us somewhere around the 146 half. So 42.50, 43, 44, 45, 46. This is, again, 4 points higher. This is going to be our target. So if we were going to buy the 142 half calls, if we purchase those 142 half calls, we're going to pay around $3.05 for those calls. Now, if I look at the graph, let's do a risk graph on this. And what I'm going to see is that I'm going to see a risk graph that shows the bond market moving down, but our expectations are that over the next couple weeks, it might rebound. If it rebounds, here is my break even. And then out here is where I can make money. In fact, potentially double my money. Now, let's go ahead and take a look at it by numbers. All right. Going along, the April 1st, 2021 calls at 142 half at 305. I know my break even is 145.55. Do you know the break even is only less than 1 point away from where our target is? So if I'm going to risk $3.05, do I only have by expiration, if we're at 146 half, this 305 could only go to 4. So I could make less than 25% on this particular trade. So even though the volatility in the options look pretty cheap, we're going to need to see something well above our target if we plan on making money on this trade. So another idea would be something we talk about a lot here, and that is creating that loophole trade, that call spread. So we'll buy the 142 halves, but if we sell something else, what if we sold the 146 halves? Just as an example, we'll do a -1 out here. And then what I'm going to do is I'm going to create a new risk graph. Now, this is a bull call spread. We are buying the lower, buying the 142, selling the 146. Now, take a look at this. If we buy the 142 half and we pay 305, and we sell the 146 half and we bring in $1.48, the net result is $1.57 or $157 for the trade itself. Now, take a look at this. We've lowered our break even. Now our break even is only 144.07. Look at the max profit if we get above 146 half or greater at expiration day. We can make potentially over 150% on this trade. That was not the case with the call option. So the call spread shows us lower risk, it does have a cap on reward, but at our target price, if we're at expiration, we tend to make more money in this case, we would more than double the trade at 146.50. All right. So that is putting together our calendar spread trade, or our money calendar trade. And then from there, taking it down some different case studies. My talking points are basically this, folks. Is the market rolling over? The money calendar thinks so, at least for the next couple weeks. Now, it's one thing to predict movement, but it's something else to trade it. I use options, and I do a lot with options when it comes to maneuvering back and forth. Should I do a call? Should I do a call spread? There are a dozen, if not more, different option strategies that we could apply to something that we think is bullish. And lastly, but not leastly, there are no guarantees. But I find it very interesting, especially with this 10-year pattern on the most popular stocks, and in this case, a very popular ETF. Hey everyone, I hope you enjoyed the video. Make sure to like and subscribe the video, and you'll get more just like this. And before you leave, check out the description below this video. I have a webinar, a cryptocurrencies essentials webinar that's happening this Thursday at 4 p.m. You got an invite to this. It will not be on YouTube. You'll have a special invitation. Check the link below, and I'll see you then.